What's up? How are you, man? Just gonna wait for some more people to jump in. It's saying no data. I don't know why it would be saying that. No data? How is that possible? Settings. Oh wait, there we go. Excellent connection, apparently. Now. Don't know what's going on there. You see and hear my screen. Okay, cool. I don't know what's going on there. It just said no data for a hot minute there. It's weird. So, looks like we're coming up on that monthly close. Let's open up a... I'll just go to the Bitcoin index chart, I think. So, monthly close has 53 minutes left. It's looking like this. I've got a line to represent, make it a pink line, to represent where the month opened. So that's the price we opened at, 42,279. So basically 42,280 rather. So 42,280, price to stay above. Well, it's, I mean, the whole thing's looking like a bit of a doji candle, to be honest. And it kind of makes you wonder, like, what's that going to produce? If we get a big doji, is that indecision? Is it bearish? Is it bullish? Like, what is it? And if I go back, I'm going to find if there's any other instances of a 1 month candle being like this, and how it reacted in such a part of the market as an uptrend. So if I go logarithmic, I found one over here. Right here is a very similar monthly candle. It was a January candle as well. January, and this is also a January candle. It was actually a red doji candle. Look at that. So it was the January 2017 candle. So if I go back to that time, it's this one right here. So we kind of look like that right now. We've done a bear market, we've recovered off the bear market, come up, and dojied like this. So I would argue that we are kind of getting something like that. Let me change this a bit. So if we compare that to now, we're shaping up kind of similar to that, and I think, yeah, look how far away that, like how long ago that was. Many months. So I don't know, like it doesn't have to spell that like a big top. Like I see some people think that we're gonna do this, you know. Not saying it can't happen, but could you imagine a dip like that with like a recovery into the bear market, into the bull, like to continue the bull market? That would be pretty insane. I don't think that's gonna happen. I think this may happen. Just grab these lines. I think the worst you're gonna get is like maybe something more like that is a bit more realistic. I don't know. What do you reckon? Some more sideways action. Maybe like a big pennant type thing. Now the FOMC meeting happened only like a little bit ago, and it was pretty much more of the same. There wasn't any real revelations or anything like too dramatic to report there. It's just another pause to the funds rate and them talking about maintaining their 2% target. I'm gonna check out the Trueflation website. Probably see me, if you've watched my streams before, you've seen me check out that website. That's sort of like a bit of a look at what inflation might look like once we get a report of this current day, like this current time. So remember, the 2% is the Fed's target. So they're suggesting that by the time we get to reporting on January, so this would be like a CPI coming out in February, like or February or March, that we get somewhere near the target. So that's kind of a good sign, I suppose. If they're anywhere near accurate, that could be a good sign. I think this is like a kind of a popular outlook from what I've seen from other analysts. It might not be that heavy of a move. Like there's a fair chance that it's something a lot smaller, maybe more like this, like a bit tighter of a triangle, not so dramatic. So maybe some boring times ahead, you know? Maybe it's... I think there's one guy that even said, yeah, it's gonna be something more like that, like just a real tight consolidation for a couple more months. even like into and post halving, like it's, I don't know. We'll see what we get. That's all speculation at this stage. Delete these lines. I'm going to look at some oscillators and see how they're faring, because I think we could start on the monthly, see what the monthly oscillator's trying to say. Let's have a look. So we've got, now the stochastic RSI's got problems on the monthly for some reason, not sure why, but anyway. We've got a MACD, we had a MACD cross up right before the hype train started for the ETF. So that's bullish, and it still looks bullish. It's still heading up, it's still climbing, right? You can see the histogram bars are still very much climbing up, ramping up, just like the start of every other bull market. Or, you know, during the early stages of each bull cycle, it's the same thing, right? You've got this ramping up, and even, yeah, it's still early. Like, we've only had, how many bars have we had on the histogram that are green? Kind of 1, 2, 3, 4, 5, 6, 7 of them. And then in every other previous cycle, it's been, let's see, that's a bit of an easier way to see. 1, 2, 3, 4, 5, 6, 7 histogram green bars right on the date before the halving. And then look how long that one was. That was a really long bull market. All of those histogram bars growing. Very nice. This one, pretty long as well. Very much more than 7. This was interesting. This got interrupted by the COVID dip and just all of this back-end volatility. This wasn't quite as smooth as this bull market. It got off to a rough start. It peaked kind of early, and then it faded to correct that peak, that early push. I don't think we've done an early push this time around. I think it's been kind of stable. We look a lot more like this bull market, I think, than we do this bull market. I think it's looking more like A than B. Just the way we're sort of taking it easy, like we haven't erupted off the ground yet like this. Though, on a Fibonacci perspective, like retracing back to the all-time high, I'm going to compare them again. I know I've done this once before in a stream, but I think it's interesting to see how it compares from a Fibonacci perspective. Let's see, okay, we'll use it like this. Something like that. So we basically hit prices right into the golden pocket between the 618 and the 65 fib level. And then if you take the comparison to this previous market, I think this relief bounce came somewhere similar. Yep, into the golden pocket as well. There's actually a deeper push into the pocket than this one, but it's looking similar. This one, the month actually closed below the 50% retracement line, so this pulled back a lot more than what we've pulled back this time. So that's it kind of looks similar, very close. All right, let's look at the other one. Okay, there was a rally here before the halving. Just want to see if that is any kind of... Okay, this one didn't even quite make it to the 618 from a linear perspective. And then this one, let me turn off auto. I don't even think this one was a 50% retrace. Yeah, this one fell short of the 50. So these recovery bounces are getting more and more or did get more and more aggressive. Just this one wasn't quite as heavy or as bullish as of a push as the 2019 push. So let me get rid of them. So it's behaving very similar to each other preceding cycle. So you've got, this was like the first one, right? We'll just call it 1. This was the second. This was the third. So we've had our 4th bear market. First bear market, second bear market, third bear market, 4th bear market. Now, excluding, this was just the initial bull phase after launch of Bitcoin. So you could call that 0, maybe, I don't know, 0. First bull run, second bull run, third bull run. So we're on our 4th bull run. Or if you want to do it where this is the first, this is the second, this is the third, 4th, and then 5th bull run. So maybe the bear market belongs to the bull run of the past. So bull run, bear market, bull run, bear market, bull run, bear market, bull run, bear market. So we've just finished our fourth cycle. If you're counting the start of the cycle from the bear market low, from a low, we've had 1, 2, 3, 4 runs, and we're basically starting our fifth bull market. But yeah, to call it like a complete cycle though, 1, 2, 3, 4. We've just completed 4 cycles. We've had 4 cycles of a 4-year cycle. To cycle number 5. Now, oscillators, I think we were looking at the monthly. So there's still a lot of room above us to go on the monthly RSI. There's plenty of room on the MACD to go higher. So we have not capped out by any means. Now, on the weekly perspective, things have kind of been hot, as we know. We've actually come up to overbought on the weekly. Kind of similar to back here, how we got overbought. We haven't quite hit an all-time high yet, like this. Like, this was very aggressive, and this was early. This was like the push to 42,000, the first ever push to $42,000. So only half of the bull run was on by that point. The all-time high was actually a stochastic lower high. So we had significant bearish divergence on the weekly RSI as we bull marketed, as we went up. And look at how hot this one was, this cycle here. What's up, Johnny? What's up? This one stayed pinned. Look at this RSI. Look at how it like sawtooth. Sawtooth stayed like all relatively high. I'm thinking that could be a feature of this one. Like if we came up here and just, if we needed to, we could sawtooth the RSI just like that. If the price takes it there, you know what I mean? So I guess with the RSI, just because it hits an overbought area does not mean that it has to come back down to oversold immediately after that, you know? Even though this is kind of what this felt like it kind of dumped back down to the oversold on the weekly. Now the cool thing about divergence, I think it was on the weekly here. Yeah, it was. You had lower lows on price, but higher lows on the oscillator, on the RSI. So that was bullish divergence. There was a big hint that this was the bottom. The weekly, if you find divergence on the weekly, that is very vital. That's very key, and and a strong signal. Any signaling you get on the weeklies, it's slow, but it's very powerful. Now let's check out the daily oscillators. Okay, the daily RSI almost came in, well, not quite almost, but it came close to getting like an oversold situation. And the MACD, let's see, the MACD's primed, it's poised to move up. It looks pretty good to me. There's plenty of room. There's room on the weekly, there's room on the daily. Oh, yeah, no, the weeklies, look, the weekly, if it wants to, it can continue to stay high, you know, if the price pushes it that way. But yeah, look, there could be a drop on the cards on the weekly time frame. Monthly, plenty of room, as I said before. 4 hour, now we're sort of getting intraday oscillator. So today could be a drawdown. Like we're pretty hot. We're closing out the month. We're at 9:24. So we're 24 minutes past the hour. We've got 35 minutes left of the monthly candle. You can see my TradingView subscription ran out. That's why this stochastic is not showing any information. Just want to see if there's any other. Yeah, this is interesting. This is a 10 and a 20 EMA. And look at that, it's threatening to do a... We'll see if it can hold. If we can keep it away from producing a sell signal. That's going to be pretty interesting to see. Just going to check it on the other time frames. Maybe the daily. See, the daily... We haven't even really bull crossed yet on the daily for the EMA, the 10 and 20 EMAs. It's been a nice signal in the past. Look, you can see one down here. You can see it bull signaled there, and it just, from that point, it's come up, so that's cool. What about a weekly? A lot of not mixed signaling, but a lot of confusion down here on the weekly chart of where it wanted to go at that time when it was flat. So at this point, the price threw these moving averages into such close range with each other that you get these signals going off, and that's what happens when you get a 10 and a 20, because they're fairly closely related anyway. They're both pretty quick. But yeah, this thing is not bad at picking the theme, like the trend. So this, yeah, if you were watching this was kind of confusing. This was like, we had our green light back here, but then it turned off, and then it turned back on, and then it turned off again, and then it turned back on again. Like almost 4 weeks in a row it did that. Let me just put this in the front of the price so you can see the signals. So like this. Yeah, so you had a red week here saying that the EMA's crossed down, so that's bearish. And then price recovered, it produced a green signal, then the following week it turned back off again, then it turned back on again. So it was chopping and changing, which is, I don't know, signals close together like that are kind of confusing. But, you know, if you were following something like this, you'd be stopped out, entered back in, stopped out, entered back in, kind of thing. Got 12 people in the stream. What's up, guys? Smash up the like button if you're able. What's up, Tinos? So yeah, I just wanted to sort of come on here, chill, watch the monthly close, sort of discuss where we're going, where we're headed. Let me open up this chart. I think I've got a little bit more analysis on this one. So I've been tracking, so the start of January into basically late January, we had this corrective move after the ETF approval, and when ETFs went live basically on the 11th, and we've just corrected since then. And this here, down here, seemingly was a low. Like this was a bottom that we were dealing with. We've since come up, and I've identified, well, the market has drawn out this channel, and we've seemingly respected it until just a couple of hours ago we dropped, and we sort of faked out a little bit on it. So we had this activity outside of the channel. We're back up in the channel for now, but this has been a wild 24 hours, like seeing this like dump, rip, and then dump again. It's like it's a very Fed type day, Fed funds rate. I think at the moment a lot of companies are putting out or pushing out their earnings as well. So shout out to Lennon X Gnarly, who posted this in B's Discord. So this shows the earnings calendar, or the schedule. So this was before the Thursday open, and this is after close. So we're waiting on Apple, Amazon, Meta. This is a big afternoon of earnings, because these companies are huge. Apple, Amazon, and Meta, Facebook. So this was a fairly big day. Big Thursday. The S&P 500 did not like that, the final moments of the day. Like, look at this. Go down time frame. Let me open up a new chart. Does it track how many tabs? Let's see. There we are. Okay. Look at that Thursday. Very crazy. We've basically like given back all of this progress above the all-time high. Bam. I mean, what was the market expecting from the FOMC? Were they expecting a cut? Because we've got a pause. We've got a pause to the funds rate again. No change. Let's check out the funds rate chart. So yep, there's another pause. So this pause period before the cuts begin, it's been kind of long. So you can see the previous, like, we haven't been up this high since the since things broke before the GFC, basically. And then you can see the how high the interest rates were during the .com boom back here in the 1999-2000, leading into 2001, with many cuts to the rate. So this was aggressive cutting. This was pretty sharp. This was sharp. And recently we had the COVID-19 rate cuts. But yeah, you can see how extreme the interest rates got back in the 80s, the early 80s, the late 70s and early 80s. That's because we had runaway inflation back then. The inflation was insane. Let me add in an inflation chart. US inflation rate year over year. Okay. So there's inflation. 2% is basically on this line. So we've almost come into contact with the target of 2%. We're currently at, what's the most recent reading for inflation? 3.4%. So inflation coming down it's pretty amazing how dramatic it's like they achieved their. This is when they started cutting rates too soon and inflation bounced real hard. Look at that, huge bounce. So they had to raise rates aggressively because inflation got up to basically almost 15% inflation rate. The worst we got this time around was 9%, I'm pretty sure. Yeah, 9. You can see it on the left here. This is the inflation rate. 9%. And look how long it took them to start hiking rates based off that 9%. It took them... They were kind of slow to start with the interest rate hiking. They should have been... I don't know, maybe if they were too aggressive it would have broken things, but yeah. It was pretty aggressive. It's pretty steep. I'm going to get rid of that. Yeah, that's a pretty steep climb. This one was a bit more... They were sort of like inflating and pause, like raising and then pausing, raising and pausing. Whereas this one was just these big extreme steps. This one was pretty rapid as well in the early 2000s. After the dot-com crash, interest rates climbed fairly quickly. Leading into, they paused the rates for a long time there. They had it paused for over a year, 395 days paused, just flat. So far we've had what? 184 days paused at 5.5%. So this is a fairly long pause. Look at this gap here where the interest rates were zero, basically, effectively zero. 2,500 days almost. That's pretty wild. Almost 2 years they had rates at zero post-COVID, so 2020 and 2021 during our bull market. All right, I'm going to close that up. See, it's asking me to restore my connection. I can only view 2 charts at once. That's all good. And I think I can only have 2 indicators at once too. Hence, when I put my oscillators on, it only shows 2. It only shows 2, not the 3. I wonder what it's going to cost if I was to... See if I can bring back... So it like recognizes when I've got more than one chart open. Let's see. That actually says TradingView instead of just the logo. So if I get a year, essential. That's what I'm on now. What? Hang on a minute. Can't even remember what I was paying for last time. 2 charts a tab. $155 American. $300 American for plus. I was paying for Essential, I think. $600 for premium. Damn. You'd want to be making sure that you're making money. Paying for $600 a year for TradingView. Damn. Look, I'm gonna be cheap. I'm gonna see how long I can get away with the free version. I think it does everything I want it to do. For streams anyway. I don't need 16 indicators on the chart. I only ever really use 1 or 2 alerts at a time, so that's no problem. Yeah. My approach is less trading now, and it's more position holding. Like, I think that's going to be more my approach. I didn't take advantage of the Black Friday sales on TradingView, obviously. What do we got? We got 20 minutes left, guys. 20 minutes. Someone's asked me to look at an altcoin. What's up, Adrian? Or Adrain? Adrain Ray. Did I see a headline today that said some bank took a major dip today, or am I tripping? I don't know, man. I only woke up like a couple of hours ago. New York Community Bank. Damn. How does the rates compared to BTC chart since 2010? Yeah, I'll be able to do that. I can compare the rates to the charts. Take a look at Jupiter GDP. Oh, Rain Man. Oh, what's up? Rain Man. Okay, the rates, the Bitcoin's history. That's the way, man. Me too. So inflation rate or funds rate? Let's do the funds rate comparison on Bitcoin. Oh, they don't like it. They're not letting me do it. I think maybe because they want me to go on the monthly. Yeah, there we are. Now I've fixed it. Let's go on the weekly time frame and go logarithmic. So we've only really seen most of Bitcoin's history has, like, of the bullish part of Bitcoin's history has been during low interest rates. This bull market happened when the Fed was hiking rates. Bitcoin bear marketed off that all-time high of $20,000 partway through a hiking cycle, so I don't see a correlation to cuts and crashes too much. This is interesting. They started cutting here, which kind of marked the top in 2019, and you had that correction followed by the huge dump out. When the rates got to zero, that's when we sprung into the bull market. So this whole bull market was enjoyed during 0% interest rates. From here to here, basically, there was no interest rates. And a lot of Bitcoin's life through this section, through the beginning, was no interest rates. So interesting. But look, big money wasn't even involved in Bitcoin for all this time here. Bitcoin wasn't that big at all. Let me just open up a, what do you call it? I want to see a market cap chart, the market cap history of Bitcoin. Market cap, all, okay. Like, check this out. I'll just go full screen. So we go market cap, and then all for Bitcoin. So you can see the market cap didn't really start picking up It hit $1 billion. Let's go log so I can see it a bit better. Where's the $1 billion line? Roughly here as a horizontal. Okay, so it cracked $1 billion in 2013, and then it's sort of been a steady climb since then. But damn, like this, yeah, this bull market was a big deal. So running from, we got up to 10 billion back here. Bear market took it back down to 3 billion basically, 2.8, and then it ran up all the way up. And this is where it got real serious. 283, basically $300 billion, 320 at the top of the 2017 bull market. Market cap. So how low did we get? 320 billion at the, after FTX, like when we pulled our lows in back here. 317, yeah, 318, 320. We reached we did. We reached $1 trillion at the all-time high. I'm pretty sure we were 1.27 trillion market cap. Where are we right now? What's the current market cap? $836 billion. 835. Yeah, there it is right there. Yeah, okay, so we're not terribly far off hitting that all-time high again. The market cap. It looks kind of far when you look at it on a linear perspective, but as soon as you go logarithmic, like, yeah. Funny that. Alright, let's close that out. We've got 15 minutes left until the monthly close. The monthly chart, this red line is the open of the month. And we are currently almost back to where we opened, creating a doji candle. Light the candle. What a month it's been. January has been pretty dramatic when you look at it. Let's mark out January. We've been at a high here. We've been at a low here. So we've recently hit that low. So Feb 1 at 10 p.m. or 10 a.m. rather. That's the month as we have it. Let me lock it in. It's almost 49k. There's January, okay. 1st of January, 10 a.m. my time, is the start of the January candle. Put there. And then this one, a low here, and then we gotta go to 1st of Feb, 10 a.m. Okay, there we go. So that's the January activity in that box. It's had it all. It's had bull run. It's had really nice rips. It's had dramatic and devastating drops. We've spent a lot of this year consolidating and correcting. It's only this final 20% of the month that we've really had any kind of recovery off that drop. So basically it's like boom, boom, and then boom. We've had it all. Even straight out of the gate, this was pretty amazing too, like that. Just in itself, that was a big whipsaw. This volatility was very crazy. This was leading up to the ETF approval. It was very volatile. And then, that big old drop, very easy to trade that as a short seller, like as a bear. That drop was very dramatic and rapid. One direction. There was no looking back. Once you broke these lows, it was just easy street, down, short. You could go 200x. Yeah, sell the news. Same with this drop here. This was very dramatic, very fast and directional. Pumps don't tend to do that often. You don't get many pumps that just erupt without looking back. Like even these pumps, you can see that there's moments of pullback along the way. Even this pump, it had two rests. You can see the rest here and the rest here on the way up. Even this one here, there's a rest in this leg. Whereas the drops, there is no break. It just happens. It's one direction. It's easier. I feel like shorting a crash is easier than longing or like a bull trend. A bull trend is a lot more cautious. It steps up. Like you get up, like that. But a true crash, yeah. Like this section, mainly this section is what I'm referring to. It's the best you get is sideways and then further correction. But yeah, that's generally the way. What was that altcoin you wanted me to look at? Jup. Let's see if I can find it. Jup. Oh, it only just launched today. Okay. I don't even know if it'll have a TradingView chart then if it only just launched. Jup in crypto. Jupiter. Oh, it's on. Okay. It's on Bybit, MEXC, and KuCoin. It's only on spot. I don't think it's available on futures. Oh no. Jup. USDT perpetual. Whatever. Okay. 30. Oh wow. They're not even letting me look at more, like adding symbols. Maybe I could do this and just look at it. Instead of adding it, I can just look at it. Okay, there we go. Let's look at it on the 1 minute chart. Yeah, dude, look at that. It's in, like, it's just trying to feel itself out, feel out the price discovery. %4 up. Yeah. Nice. New coin. Yeah. Cool. Let's see how we're how far we've got. There's 8 minutes left before the monthly close. Like I was saying, January has had it all. It's had a lot of volatility there. I think if you measure it from the open to the top, that was almost 16% performance. From the top to the bottom, though, that was like a 21% move down from extreme to extreme. That's a fair distance on Bitcoin. That's $10,000, $10,435. I bumped my microphone. Sorry about that. So yeah, I don't think It'd be funny to see if it in the remaining, like, what is it now? The remaining 6 minutes? If it dropped back down to the open. So this is the open of the month down here, this red line, this pink line. If price was to savagely drop in 6 minutes, we'd get a true doji like for the month. I mean, it's done it before. Look how fast that drop was in this one and this one. I don't know, I think we're going to get a close relatively in this kind of region. Let's see how it goes. The monthly, guys. 17%. So sorry, 17 people. 17 people tuned in. Okay, 5 minutes to go. 5 minutes left of the TradingView January. Today was brutal. The last 24 hours was crazy. I have thought about that. Yep, flipping up these streams, but that would mean that I'd have to watch the stream and then find moments to clip. I kind of want to. I wouldn't mind doing like a video clipping moments from the past, like from when we were in the bear market and leading into the bear market, like just moments like things that I was speculating and trying to forecast, just to see how either accurate or inaccurate I was with my feelings. With my feelings, guys. Don't trade with feelings. But my sentiment at the time, like what my technical analysis was suggesting, what kind of theories I had. I think that would make an interesting video. Yeah, I try to keep it simple. Try to keep it easy. It doesn't have to be complicated. I know a lot of channels go into like real complex crap. Three minutes to go. Not far. Looks like they're not really playing any games with pushing it in any direction before the month closes. We're probably just gonna get somewhere here. The candle's gonna look something like this. Something the way it does now, I would say. I'll watch it back on the 1 minute. Then we're gonna find the finish line. Yeah, altcoins have had a pretty rough last few days, or last 24 hours. The ETFs are all down 2.5% basically. Two minutes to go. What's going to be interesting is to see the start of February. What is the price going to do once the January candle's closed out? Is the February candle going to start taking off somewhere, like dropping dramatically or rising up dramatically? I don't know. Either that or it's just going to do exactly what it's doing, like nothing happened. It's just going to go sideways. It's obviously one of three. one of three options there. Maybe being so hyper-focused on the close of the month is not that vital. Maybe it needs time to bake out a bit more. Give it a few hours, see if something happens. Look at this. Okay, we're starting to get a move down now. We are in the final minute of January. UTC, the final minute. Things are getting a little hotter with the correcting. Relatively speaking, we are flat. There's nothing happening. 20 seconds to go. Yeah. Could have predicted nothing would happen. Alright, here we go. 2, 1, 0. Okay. Happy February, everybody. We made it. Nothing really happened. What does the monthly candle look like now that we've got it in? Let's hide all this drawing. There we go. It's a big old doji. Let's open up this one actually. Yeah. Doji. Not even 1% progress. 0.70. 0.7% candle body on the monthly. Yeah. So like I was saying before, it had a big journey. There's a lot of drama in January in that box, but we're right back to where we started, kind of thing, you know. There we go. There's a snapshot of January. Here we started over in this region. New Year's Eve, New Year's Day, and we're right back to where that region. There was a big move up, big corrective move to balance that back out, and we're kind of like striking the middle of the very average. Ended up being very average on the candle body. Cool. All right. Delete that. Can't believe we are 1 month down already in the new year. We've already done January. That's pretty crazy how fast time has gone. How did the daily go? This is the daily time frame. Tuesday, Wednesday. We've just started the Thursday candle. Yeah, corrective. Tuesday and Wednesday were corrective. The last 2 days of January. Very nice rip before that though. Like this was a really cool trend to ride. What progress was that for Bitcoin? Percentage-wise? Almost 14%. That's a big deal. That's a lot of movement for Bitcoin. Check out this line though. This line came in back in November. So you had a test here, a big test here with a wick. Test there. We tried to hold it, this trend line, and then bam, we lost it. Now we're hitting our head on it. So we were unable to get back up over it. And that's an interesting line to be looking at, I think, at the moment. It's a bigger time frame, higher time frame line. Let's turn that channel back on. Oh, this is the big, yeah, this is that logarithmic channel that we're still in. Oh, look at that. Look at where the bounce point was. It was off the median line, off the middle of the channel. There's the FTX drop. So we've been in this channel for a long time, this ascending channel. We are on the bullish side of the channel as we're above the median line. I think I have to go back to my other chart, this one, to see the local channel that we're in. On the one, let's see the 1 hour. Yeah, we've dropped out of it. It's less of a logarithmic channel, more of a linear channel. So from a linear channel perspective, we're sort of on teasing to lose that lower channel line. What's up, Jade Cheddar? Yeah, so 7 Eastern Standard Time is the monthly close. Yeah, it's the TradingView candle monthly. So mark your clocks. Pinpoint. Yeah, the close of the daily. For me, it's 10 a.m. It's already the 1st of January. Sorry, the 1st of February. It's been the 1st of February for 10 hours already for me. So, but I think you guys in the US are still 5 hours away. 5 hours away from the end of Jan. Yeah, you guys are UTC -5. That makes sense. All right, that pretty much covers all I wanted to talk about and discuss. As far as the plan goes, I know I had a plan drawn up on this chart. Let's bring that in. There it is. I think I can view it on like the 4-hour chart or the daily. Okay. So we smashed the support. We bounced on it, and then here we are. Hey, Donnie! $10 super chat. Thanks, Donnie. What's up, bro? Good seeing you on and putting in the work. Yeah, appreciate that, man. Thank you. Hope you've been well, mate. I'm just about to wrap this one up. I haven't really got too much more to discuss. We're sort of, to be honest, we're still in this consolidation. It's, to me, this is what it looks like. Like, if you exclude the extremes, we've been pretty much stuck in this box this whole time. We've had some moments outside the box, but they don't represent the whole. So yeah, we have not really departed the box yet. We're smack bang in the middle of it still. And I think that's going to be the theme up until the halving. This is, I think this is likely. Like, you get something like this. Let's see, maybe a lower high comes in over here or something. And then we correct again, but not so deep. And then, yeah, maybe something like that. Either that, or we get like a descending, like a falling wedge. Something like this. A falling wedge with a breakout into the halving. Who knows? Let's see what we get. Like, I mean, it's already falling quite sharp, isn't it? So if we dip into the buy zone, that'd be cool. It could even be like aggressive like that, where we dip down into the mid to low 30s and then find support and then really spring out of it, or even more explosive, and then meet some resistances into the halving and then plateau back out. I don't know. It's all speculation, as always. Anyway, I'm going to wrap this one up, guys. Thanks for tuning in. It's been an hour and 4 minute stream, so we'll keep it kind of concise. I don't know, man. Low 30s, I think maybe if we see the stock market crash heavy, like correct real heavy, that might be a catalyst, like a headwind for crypto and Bitcoin to correct down into this zone. But yeah, I don't know. There's evidence that we're hanging up here. Look at this buy pressure on this bounce here. That was pretty significant. We will see. We will see. If anything dramatic happens, once again, I will jump on stream and we'll talk about it. We'll discuss it. But I'm still buying. Look, but my overall outlook for the cycle is still bullish. I'm still gearing up for a bull run. By no means do I think we've lost the bull trend overall since FTX. We've still got the bull trend. You can see that. It's very clear. We have not lost it whatsoever. Like, look at that. That's the bull trend in front of us right here. Nothing to me spells the end here. Yes, we've got a local lower high at the moment. We've kind of done a head and shoulders, but even if we come down to the buy zone, that has not killed the uptrend. It's a deep correction, but we can still go up from here, and it's still bullish, I think. Anyway, play it to the time frame of your choosing, to what you're comfortable doing, and be safe, and I'll catch you on the next one, guys. Thanks for tuning in.